struggle as artists isn't about appeasing the crowd. Rather, it's about tending to the broken parts inside of ourselves. We create things as a reflection of this struggle, to study our perception of self. Ben wave isn't necessarily a thing you achieve. Rather, it is a state of mind which you constantly strive toward. This all comes from an understanding that ideas aren't static, but fluid, like water. Be like water.
What's going on, folks? Welcome to our This Week in Crypto stream here on August 12th, 2022. It's been another mostly positive week for crypto, and we're going to touch on many topics as to why that might be. The biggest one, as you can see by the thumbnail and title, would be the Ethereum merge and the hype behind it. It's been one of the biggest stories. It's actually the trending topic in crypto for the past 24 hours ever since the merge date was announced for the 15th and 16th of November. And there is, of course, several other things going on in crypto that are helping many prices continue to climb and rebound back to prosperity. As always, before we jump into it, I want to remind everyone, we aren't here to give investment advice. We are here to go over the news in crypto and talk about the data behind it, what the divergences are showing, and potentially make some educated analysis about where things can go next based on where these divergences have played out prices in the past. So with that in mind, we're looking at several things that have happened over the past week. Bitcoin being just below 24K right now, Ethereum being just below 1900 right now, and Chainlink, for you Link fans out there, it's been teasing $10 again for the first time in quite a while. And then, of course, some highlight altcoins. Hex has been going pretty wild over the past week at plus 24%, Avalanche 16%, plenty of 16s here near Link, as I just mentioned. And we've got Quant, Toncoin, Zcash, the Graph, and Huobi token. These are all notable tokens that have continued to climb double digits over the past week. And then as far as the amount of actual discussion related to these tokens, you can see here, Bitcoin has actually declined in discussion. Ethereum somehow has declined despite the announcement. I bet this changes probably by today, as many people didn't catch the announcement yesterday and might see it today and start to talk about Ethereum even more. It's actually on our trending topics right now. Stable coins are being talked about less, at least Tether is, but USDC, on the other hand, is being discussed more. And then you can see mostly red here. It's mostly been a down week for crypto discussions in general, despite prices rising, which is generally not too bad of a recipe, because it means that people just are not believing the hype and the mainstream are not jumping back on crypto yet, despite a pretty sizable rebound, especially for altcoins in the past, I don't know, I'd call it about a month and a half now, almost 2 months. But regardless, it's interesting to see that social volume is staying pretty dormant despite prices looking pretty good. Ethereum has made a few teases above 1900 before dropping back down, but 2000 is of course within the realm of possibility over the next week as people decide just how big of a deal this merge is. Many people are wondering whether the price will go up or down over the merge, and we can spend a little bit of time talking about that on this call. The short answer is it's impossible to know. Halvenings in Bitcoin are usually good long-term, and this merge would kind of function as a triple halvening with something like 70 to 90% of the supply going away after the merge happens. So it should be very interesting to see, but for those wondering what is causing Ethereum's price to go up the way it has, if we look at the 30-day here, it's up 75% in the past 30 days. It's very likely to do with the overall optimism that traders have related to this merge. But you can just take a look at the 30-day returns for so many assets here, and it's pretty universal outside of a few all stable coins. Unisud Leo is down, but for the most part, every asset in the top 100 is up if it's not a stable coin or Unisud Leo or chain here. So that tells you just how good of a streak crypto has been on after such a bad first half of 2022, which is of course still left many market caps well below where they were despite these rises over the past 30 days. Now, I mentioned the fact that Ethereum and the merge are the leading topics in crypto right now. And that's proven here on our Sand Trends page, which lists the top 10 subjects that are seeing the highest percentage gains in discussion across social media platforms such as Telegram, Twitter, Discord, Reddit, and some other pro traders chats. And what we could do is actually look not just at the trending word, we can see how much it's been trending on a mini chart here, or we can see the connected words here. Obviously, the merge is going to be related to Ethereum, and Ethereum is going to be related to merge. And then also Bitcoin is being discussed as people compare the price of Ethereum versus Bitcoin. Also discussed are the fees related to Ethereum, the price, all sorts of things. And this can be incredibly useful as you want to have a snapshot as to what the trending topics are and what's been in the news and how it's going to affect the markets going forward. You can see moons here are being discussed related to Ethereum, BlackRock, and the fund related to Bitcoin and how it's investing right now, all sorts of different topics that you can pick up on. And what we can also do is type in an asterisk right here in the search, and this is going to give us a glance at all of the discussion related to crypto over time for any time period we want. We're looking at the last 3 months. I'll zoom it out to a year, give it just a few seconds to load, and it's going to show us the overall discussion rate and how it really skyrocketed here in late April. At this point, people were talking a lot about inflation and the Fed decision, which essentially did not work out in crypto's favor and flushed prices down. And as prices have gone down, you can see how social volume has sunk and sunk and sunk. Maybe a little bit of an uptick here over the last 3 days related to Ethereum and some altcoins that are doing quite well. But overall, the amount of hype that was happening back around the all-time highs that occurred in mid-November have not quite halved, but close to it, where there was 307,000 at the peak, 320,000 it even looks like. And now, I mean, we're getting 125, anywhere between 125 to 150, maybe 170 occasionally thousand in terms of daily social volume. So it's a far cry from where we were, and that is not necessarily a bad thing at all, because it really means that there's just a lot of weak hands that have dropped out, and the people still talking about crypto are those who probably have been through these cycles before and are trying to find some news to help satiate their understanding of where prices will go next. And it's not an easy thing to do, but the people still talking about crypto are usually those who are understanding that crypto is cyclical and there can be a turnaround for prices. You can see also how much Telegram has really dropped off. Reddit's been a little more stable and more of a gradual decline, and same with Twitter. Of the three, it looks like Twitter crypto is staying the strongest, where Reddit's really dropped off a lot, and Telegram, especially around here right before the big drop off, they have had a considerably smaller amount of discussion related to crypto. And it's interesting because Telegram is probably the most anonymous of the three. Reddit at least has post history. Twitter has post history, plus a lot of people use their actual identities. So it's you know, the more people have their actual identities tied into something, the more they're sticking around when it comes to crypto. And I find that interesting as well. It could be because a lot more fake accounts are used when a platform is completely anonymous. That's a theory that I have personally. But I'm interested to hear some of yours. So feel free to drop them in chat, or mention them in the comments here on Twitter or on YouTube where we're streaming from right now. All right. Another thing to mention, Ethereum is number 2 on the top 10 trending assets right now, and it's happening while prices are rising. So it's not the trend isn't just related to the merge. It's also because Ethereum is up 75% over the past 30 days, and that's catching a lot of people's attention. And I want to remind everyone of a back test that we did about a year and a half ago. And we tested hundreds of different assets and what happens to them when they hit a top 3 position on our social trends countdown. Generally, when prices are rising and an asset hits the social trends page, especially the top 3, we'll see an average of a 12% decline in price over the next 2 weeks after that top 3 position occurs. And it occurred about 12 to 16 hours ago after the Ethereum merge was announced. And since that time, Ethereum has gone down a bit. I'll show what I mean here. If I look up just Ethereum, and we'll go to the last week. So notice how we had some big spikes before the local top here, and then this was the most recent one right here. And the price was moving up, and right after these big social volume spikes, boom, we had a bit of a leg down. This is not a huge, I take it back, sorry, I need to put it on Ethereum. That was Bitcoin's price. So same thing. So we had the big spikes here, and then prices began to decline. And then right here, Ethereum had a local top here. It was sitting, if I were to really zoom in, it would be a little over 1900. And then boom, it had a big drop right afterwards. And it's recovered a bit since. But the moral of the story is when you see a big spike in social volume and the mainstream starts to really pick up on an asset, especially going into a price rise, that's when you'll very often see a decline happen right afterward because too much FOMO is jumping in. And a lot of people who have been in Ethereum already are looking at the big surge combined with the popularity of the asset from the mainstream as an opportunity to take a little bit of profit and wait for prices to go down after the mainstream calms down about the subject. And that's essentially what appears to be happening with Ethereum. Now, it isn't just a complete, mainstream hype fest related to Ethereum. A lot of people are doubting, whether the merge is actually going to be a good thing for Ethereum. And it's not all just FOMO. But for the most part, when an asset is going up 75%, regardless of reasoning, regardless of events coming up in the near future, or good news, or Amazon or Apple Pay adopting that asset for payment or something, it's still going to lead to some sort of temporary pullback after the mainstream puts it into top 3 trending territory. So that's typically what happens. We'll have to see how it plays out. There are a variety of reasons for prices to go up or down, but I wanted to point out the timing of this with the top 3 position of Ethereum hitting, and then seeing how prices had declined immediately after, just like we almost always see. And it can go both ways too. A lot of people doubting Ethereum back here a couple days ago, showing a bit of a decline. It gets discussed a lot, and then boom, there's a huge blast off. And this wasn't independent to Ethereum, of course. This was related to the consumer index data coming out and having it be a positive announcement with inflation not going up. So speaking of that, if I look up inflation and also look up, we'll do them together. We'll do CPI or consumer index or inflation. We'll just put those all together here and let it compute. And we'll put this back on Bitcoin's price. We'll put it at last month. So we can clearly see when the consumer index data came out here on the 10th and how it had an immediate impact. It wasn't something just absolutely mind-blowing, but we did see that prices went up from 23.1K to a peak of about 24.7, 24.8K, give or take about 16 hours later. And this was likely directly related to the optimism that resulted from the consumer price index data coming out, showing that inflation had tapered off and did not go further north as a lot of people were fearing. So real life issues with, or I shouldn't say issues, real life happenings with the crypto markets can very much be a factor when it comes to crypto still. And speaking of that, we can look at the correlation between Bitcoin and the S&P right now. check out what's going on there. So if I load up my template here, which will show Bitcoin versus the S&P versus gold all together, let's take a look at what's going on here. So Bitcoin is shown here in green, gold is in gold, of course, and the S&P is in teal. And it's very interesting to see that since February, when there's been a very, very tight correlation between crypto and equities markets, they've run a very, very tight line together. But right around here in mid-June, this was the bottom for Bitcoin, at least the local bottom for the year so far. The S&P has really emerged and bounced back much greater and significantly than Bitcoin has. The S&P got to a top of about 4630 or so. It's back up to 4200 after being as low as 3600. So give or take, it's a little more than halfway back toward its top. Bitcoin, however, was sitting at around 48K, 47.5K at the top, got to as low as a little below 18K. Actually, it was at like 17.8 or so at its bottom, and has now recovered back to 23.7. But that's not nearly a halfway recovery the way we've seen the S&P. And we did the math over the past couple of weeks. The S&P has actually, I have the math here. I'll show you what it looks like on Twitter, because I had the exact numbers as of a couple of days ago. This is it. So as of the 9th, the S&P was down 13% in 2022, whereas Bitcoin was down 51% in 2022. But in the past 2 months, I should say, not weeks, the S&P was up plus 3%. It's probably maybe plus 4% now, just in the past 3 days and what's happened since. And Bitcoin is still minus 22%. That's probably still about right, because it's been flat since the 9th. And that's a big difference, right? In the last 2 months, we've seen a pretty big correlation break here, with the S&P really rising and Bitcoin rising also, but not nearly as much, because it's still in negative range in the past 2 months. So that's a sign that, some of these retail investors have jumped out of crypto and jumped back into, or at least held their stance in equities, because a lot of the new entries in 2020 and 2021 in crypto were people that were coming from the equities space and pouring their money into crypto, seeing the massive amounts of percentage gains that were happening there and starting to dip their toes in there. But after this drop, they've, somewhere along this line dropped off of crypto and stayed in the less volatile equities, but have not come back in to crypto here while staying in equities. So that's sort of the theory as to why there's not nearly as much bounce in crypto, at least yet. Some might argue that that makes crypto more bullish, because if this correlation still exists, which there probably is, I mean, both are rising, then that would mean that Bitcoin has some catch-up time and making up to do to catch where the S&P is in terms of its past 2 months being in positive range and Bitcoin still being very much in negative range. So take that how you will, but to me, I think this is a sign that the correlation is starting to break, and that's not necessarily a bad thing. We've done many studies to show that the correlation between Bitcoin and equities generally has the best results for Bitcoin when there is none. Not a negative correlation where they're going in opposite directions, and not a positive correlation where they're going in the same direction. You want to see Bitcoin have absolutely no dependence on equities whatsoever. A zero, mathematically a zero correlation, not anything near +1 standard deviation or -1 deviation, just zero, no dependence. And that is where bull runs generally start, when it's not caring whatsoever about how equities are doing that day or week or month. And you'll tend to see good results there. A lot's going to depend on this merge. I know that Bitcoin is independent from Ethereum. but Ethereum has had a huge social and price dominance over Bitcoin in the crypto space for the past month or so, as it's really surged compared to Bitcoin. So that has to be something we keep in mind. A lot of different factors are going to play out. You know, COVID is still a thing and something that impacts all markets. The Russia-Ukraine war is also still a thing that's affecting markets, and inflation. And you know, even though there's going to be no FOMC meeting this month, there is going to be one in September once again, and many are expecting that inflation is going to dictate what the FOMC does in terms of another interest rate hike next month. So that's still something that's going to be in the back of traders' minds. So that's a little update on the correlation. I've also got this chart prepared to discuss because we did just mention how whales and retail investors are viewing crypto right now, and why, you know, perhaps Bitcoin has not bounced the way equities have the last couple of months. So this chart takes a look at Bitcoin's whale holders, anyone holding between 100 and 10,000 Bitcoin in their wallets. And we're comparing that with Tether sharks and whales, because we wouldn't quite call $100,000 in USDT a whale address. However, $10 million, absolutely, that's a whale address. But we found there to be pretty good alpha and good correlation with Bitcoin's price when we look at a combination of anywhere between $100,000 up to $10 million in Tether. So for convenience, we have them both here on the same chart. And let's take a look at both independently, beginning with Bitcoin's whales. Now, Bitcoin's whales, if we look at the past, we'll zoom it out actually just a bit to the last year, give a little more context. We can clearly see that Bitcoin's whales were rising going into late October as the all-time highs were starting to hit. We had one big all-time high on October 19th, and then another one about 2 weeks after this top here on November 7th and 8th or so. And Bitcoin's price, or I'm sorry, Bitcoin's whales got up to about 49.5% of the supply held. Since that time, if I hold down shift here and I drag all the way across, if you look at that yellow line up on the top left box, it says that 3.37% of Bitcoin supply have been dumped by these whales. And overall, that's about 6.8% of their overall holdings. That's pretty significant. It shows that there really hasn't been the same level of confidence ever since late October. We're about almost 10 months past that point when they were at their top. And it's not a coincidence at all that prices have dropped off significantly since that top, even though there was a 2-week delay. And that's good, right? That kind of demonstrates that there is some leading property to this metric, where there's a little bit of time to react after whales dump to get your money out, and a little bit of time to react as whales accumulate to put some of your money in. And of course, it's all educated guesses. Nothing is a certainty here. But if you are following these two whale lines, you're generally going to be on the right side of things, because the top traders and the key stakeholders who have the most on the line and the most ability to move markets, they're going to be the ones that continue to dictate where prices move next, especially on those big trends, right? So for now, things are still in a long-term dumping period for sure. However, since July 25th or so, we're looking at just about 2.5 weeks since, there has been a little bit of a rise. About 0.1% of the overall Bitcoin supply has been accumulated back from these holders, and it's about 0.22% more than what they were holding 2.5 weeks ago today. Call it a very small rise, right? If we look at this overall chart, this certainly isn't enough to say, okay, they're in an accumulation pattern again, but it does tell us that they're at least moving in the right direction. And some of this minor rise that we've seen in Bitcoin is justified, and it isn't all just due to the S&P rising and Bitcoin being latched onto that. So that's kind of an overview of the Bitcoin whales. Now we can take a look at the pink line here, which is the aforementioned Tether sharks and whales. And we, of course, see a similar trend. They were holding 41.5% back a year ago, and they're holding 28.3% now. That's a huge drop off, much larger than Bitcoin. And these axes are, of course, different. So it looks as though they're kind of being dumped in the same percentage fashion, but they're not, because we're graphing lows to highs for each axis. And this pink axis is much more volatile and greater per denomination on the axis. So they're both going down for sure, but Tether's whales and sharks are going down much more swiftly. But we do see the same phenomenon, at least in the past week, where there's starting to be a little bit of accumulation again. And it's nothing we haven't seen before. We saw a similar slight accumulation here in late May and early June that didn't really result in much because they dumped just prior to the huge drop in early to mid-June. But regardless, it is good to see, you know, if I zoom in here, it's really good to see this start to, you know, have both of them move in the proper direction that we're hoping to see if you're a bull, of course. Since the 25th for Bitcoin, things have moved up. Since the 3rd or so, things have moved up for Tether here. And over the next week, we're about to see whether the trend will continue or not, because prices since the end of June, at least for Bitcoin, are up 24%. And that's one of the lower gainers compared to some of the other assets in the top 100 for crypto right now. So good to see there on the whale side. And we can probably look into some other whale behavior toward the end of the call as we take your questions in the next 15 minutes or so. But why don't we move on for now to some of the main metrics for Bitcoin. We might look at Ethereum a little bit too briefly and check out what's going on for the top asset in crypto, regardless of all of the hype related to the Ethereum merge right now. So circulation, we can begin with. I'll bump it back to the last 6 months or so. Circulation, we see that it peaked up here in mid to late June and has been declining since. Not much to say there, but if we look at the NVT model that we have, which will look at the token circulation versus the overall market cap of the asset, we see that after a long stretch of green and going into semi-bearish territory last month, we're actually in bearish divergence territory right now. It's not great to see, and the reason is because prices have risen, but circulation has declined. And we can illustrate that quickly just by drawing a line on the smooth moving average for circulation here and draw a line for price here. That's not what we want to see. We want to see the wedges move the opposite direction, where price is moving down. Well, we don't want to see price moving down, but we want to see circulation moving up relative to price, however price is going. And right now we're seeing the opposite. And until that changes, this NVT model is going to show orange and red, indicating that the price rises are not being justified by the amount of unique tokens moving on the BTC network right now. So that's something to keep in mind, but keep in mind this is a very long-term chart, and we can show just how many short-term holes there are in you know, making your trading strategy directly correlated to this NVT model, because obviously the circulation was still looking very healthy from October through June, but prices were dropping pretty significantly while this NVT circulation was looking healthy. But keep in mind, given enough time playing out, it'll generally be right. We can see very clearly the red here in March dictated that prices would move down. The yellow-green here dictated that circulation was finally looking healthy and things took off. You know, even going back to 2018, when it was red, things moved down, green moved up, red moved back down. These aren't bars that were colored in hindsight of the price. These were legitimate alpha indicators telling us that price would move the direction of circulation. So it's not always right. We'll have rises through red and we'll have declines through green, But this is something to keep in your back pocket and check in on if you're a Sandbase Pro member, to get a glimpse of just how healthy and how much utility an asset is having at any given time. I'd argue that Ethereum's chart here is probably a little more accurate when it comes to predictions. We can look all the way back here, right back in July 2019. After things were green here in May and June, July began to show a very low amount of circulation and prices declined. Then when things began to get a little more neutral, got a little volatile, and then we have this long stretch of bright green where there's a ton of circulation circulation compared to the price, and prices take off. You can see that it was still rising, even though it was a lot more volatile once it got into semi-bearish territory. And then eventually a big collapse happened because we're not getting enough circulation during this moment. Same here, a little bit of rise into the red circulation months, but eventually a big drop off. And then we finally get into bright green, and that triggers a bounce going into July and August, where we're now back in red territory. So there's going to be a little bit of a delay in how these colors dictate prices play out. But overall, you don't want to see both Bitcoin and Ethereum in red. And that is one of the bigger caution flags we're seeing on the on-chain end for the top two assets in crypto. So with that in mind, let's go down to daily active addresses now, another solid utility metric for Bitcoin and any asset out there. And overall, it's been a slight decline ever since May, when we had about 1.1 million daily active addresses happening on a day-to-day basis. It's dropped down, and we're now down to about 895K or so. So overall, if I drag all the way across this 6-month chart, we're seeing that daily active addresses on a smooth moving average basis are down about 37.7K per day over the past 6 months. Not great to see. Of course, prices are much lower. So some might argue that the price is baked in a little bit to this lower daily active address metric. Regardless, though, we want to see this. We want to see addresses start to rise again, and that just has not been the case as of yet. Moving on to another very important metric, the 30-day MVRV, illustrated here in pink. As of now, we are in positive territory. The average trading returns of 30-day traders who are active over the past 30 days is sitting at about plus 3.8%. Generally, the more risk there is dependent on how much higher the MVRV is above 0%. As long as it's not above plus 15%, which will be just above this axis here, right around where this tip point was in July, on July 20th, that is considered to be the danger zone. We're nowhere near that danger zone, but we are slightly above normal risk expectations because we're in positive range here at plus 3.8%. So MVRV is looking fine overall, if not just a slight bit overvalued. That's 30-day. Now, if I take that off and look at the 365-day, let's go back 5 years to 2017. Give a nice overlook at the 365-day MVRV. So we got really to a peak here at plus 154%. This was during the big hype days of the 2017 bull run, and it hasn't been nearly this high since. But if you look at most of the instances where there were extreme highs or extreme lows, you'll either see big tops or big bottoms in price, just like we saw for each of the three that I'm circling here with my mouse. Fourth one here, this one happened a good 2 months before the April then all-time high of last year. This was about a month before the October-November all-time high, which is why there's such good alpha here. You can really react ahead of time when you're starting to see these big spikes. And then, of course, the latest one, this would have been the great time to add to your portfolios because the 365-day MVRV was sitting at its lowest point since November of 2018. That's a very long time. and can definitely be considered an extreme when you're seeing the 1-year average trading returns down so low. So it doesn't mean that prices will continue to climb and the 365-day MVRV will just go right back up to 0%. But as long as we're still at negative 31%, the long-term risk here is much lower than the normal amount of risk. If you're a long-term hodler of Bitcoin and you're kind of just sitting and waiting, you're looking pretty good as long as the long-term MVRV is so negative. So 30-day MVRV is looking just slightly overinflated, but the long-term is looking still significantly underinflated. So that's a pretty good sign. And we can kind of combine many time ranges together and look at something like this to get both a short, or I should say a short, mid, and long-term look at how the risk assessment is for a lot of different assets at once. It's going to, of course, do a quick refresh, but before it did, I saw that Bitcoin was sitting just above 0%, showing there's a slight undervaluation to Bitcoin right now. The further up we go, the more of an opportunity zone there is on this chart. So Bitcoin is looking pretty good right now. There are still several assets that are looking a little overinflated. Ethereum, while it's loading over here, I'm going to go back to the MVRV chart so we can look at Ethereum instead. So on the 365-day chart, it is looking just a little worse for Ethereum, sitting at about negative 27% per average trader over the past year. And then if we add the 30-day back, this one is fine. We'll zoom back into the last 6 months. So the 30-day MVRV, unlike Bitcoin, which was sitting at plus 3.8%, Ethereum is at a whopping plus 17.7%, which makes sense because it's gone up significantly more over the past month or so. And that means it's above that danger zone. And that's a concern for sure, because this is usually a point where you start to see a lot of local tops for assets. Now, of course, this is an extraordinary circumstance for Ethereum with the merge coming up next month, and a lot's going to be dictated by how positively or negatively the crowd's sentiment perceives this. But overall, there is going to be a large amount of risk as long as the 30-day MVRV is above plus 15%. So be a little bit concerned about that. Now let's go back, see if things have loaded. Not quite yet, it's getting close though. We'll go back to our chart here and switch to Bitcoin again in the meantime. Age consumed, we did see a slight spike here on the 10th. This is when the consumer index report came out. That means a lot of dormant tokens were moving at that time. Age consumed is calculated by taking the amount of dormant tokens that are being moved multiplied by how long they were sitting in those addresses. So this was pretty significant. And you did see that the spike coincided with around the local bottom, and there was a slight uptick since. Supply in exchanges continues to go down, which is great to see. It's back down to about 9.3%, which is pretty much the lowest we've seen in quite some time. If I go back to, we'll go back to like 4 years ago. And the last time that the supply in exchanges was this low was in November of 2018, after there was that huge influx of coins moving to exchanges that resulted in a big price decline back then. But as long as things are moving down, that means there is less risk overall for a future sell-off to occur that will be significant enough to really shake the markets. So this is good to see, and the downtrend really has been going on since February of 2020, even pre-COVID. So that's a very, very nice long-term metric. Exchange flow balance is staying pretty neutral for now, not too much to say. It's probably going to coincide with this, which is continuing to show a favoritism toward the outflows instead of the inflows. Zoom back in here to the last 6 months. Network realized profit loss, not doing much. Daily development activity is fine. Social volume and dominance is an important one to take a quick look at. We've talked a lot about the plus 20% mark, having Bitcoin be talked about for at least 20% of all social discussions on Telegram, Discord, Reddit, Twitter, and other pro traders chats. If the social dominance, this line here, is above 20%, it usually is a good thing and can mark bottoms, as it did in mid-June when you see this big spike here, an even bigger spike here in mid-July. These both were kind of around local bottoms as people were doubting the validity or the bullishness of Bitcoin, which of course is part of the reason that Bitcoin became bullish at that time. When there's negativity and fear, that is generally a good thing for prices. And it did do a brief jump over it as the CPI was announced, but then it has quickly jumped back below to about 17.5% where it sits now. So it is below that 20% mark, which we deem to be kind of that healthy social dominance range. It's not significantly below. We're not seeing like a huge lack of discussion like we saw back in late March when everyone was talking about altcoins to a significant degree over here, and that marked a local top that came up. But we're sitting just below it right now. Consider it mostly neutral, but if we start to drop below, about 15% social dominance, and everyone is starting to get euphoric toward altcoins and F-based assets because they've been going nuts, that's when you have to be a little worried. Like you were, even here, it got very close to 15% or below, and there was a slight decline during that time. So when you see it up here, prices are going up. When you see it down, prices generally go down more often. Definitely not a perfect alpha correlation or anything like that, but keep it as a rule of thumb, looking at the social dominance of Bitcoin and include it as one of those factors in whether prices will move up and down as a complementary metric to some of the other metrics you're looking at. The other important social metric that we like to look at consistently would be weighted sentiment. And I like to look at it from a weekly perspective rather than daily. It gives us a little more of a macro overlay instead of a micro one. And we're seeing that it is slightly in positive range again. Overall, it's pretty much neutral though, unless we see a huge spike like this or some huge negative spikes like this. It's not going to have too much of a significant push toward prices moving up or down. When people get very euphoric though, that tends to be when price declines happen, as it did while the euphoria was happening this week. And then vice versa, when things are negative, you'll actually see a slight decline. And yes, there was still a huge downswing while there was negativity. But overall, if you look at most of these negative bars, prices are declining as traders are showing disbelief and doubt in the price being able to do what it's doing. So for now, pretty neutral. Shouldn't have too much of a pull on prices. Ratio of on-chain transaction volume and profit to loss. I'm going to bring up both Bitcoin and Ethereum together here. You know what, before I do, I'm going to check in on that MVRV model that I promised. So just a quick glance at this. Chainlink's been really going off. So Chainlink is showing an overbought signal right now, not quite in the danger zone, which would be reflected by this red dash line, but it's getting close. So I'd be a little weary of Chainlink. Celsius is obviously very overbought right now after its huge surges that it's been seeing. OKB is also overbought, and these are the only three in the top 100 or so where we have MVRV data on that are showing overbought signals. Everything else is either in semi-overbought, neutral, or semi-underbought territory. The best looking ones in terms of MVRV across multiple time frames would be AMP, Decentraland, Loopring, Scale, OMG Network, Ren, XRP Network, The Graph, Sandbox, or Uniced Leo. These have all kind of trailed behind the rest of the altcoin pack, and that's why they're having a bit of a semi-underbought signal right now. So keep that in mind. Bitcoin, as I mentioned, is just slightly into semi-neutral / semi-underbought territory here. But none are anywhere near the opportunity zone, which would indicate that this is a very, very good time to be in crypto. But we do have a few in overbought territory. So keep that in mind. All right, back to the ratio that I promised. And then Balresh, if you can gather up a few altcoin requests, I'll start to take a look at those. So Bitcoin's ratio of on-chain transaction volume and profit to loss, it's showing that the ratio is about neutral right now. Not a significant amount of profit taking compared to capitulation, or capitulation compared to profit taking. However, take a look at Ethereum here. We're seeing a huge spike where it's almost hit the same spot that it did back in March when it coincided with a local top. Bitcoin and Ethereum's price both kind of hit a top right around here in late March and had a huge fall ever since. And that's something to be very worried of. This is definitely a bearish signal for the short term, because so much profit taking is going on the network for a metric that's supposed to be close to 0% most of the time. A significant amount of profit taking does generally lead to some sort of retracement eventually. And we can see pretty clearly if we zoom out a little bit, most of these spikes that were this high coincided with a local top shortly after or during, as we saw here, as we saw here, as we saw here. And even here, this was a short-term one for Bitcoin and Ethereum's prices. And for now, we did just dodge a week where Ethereum's price or profits were very high, or profit taking, I should say, was very high, and prices continued to go up. But now it's gone up even higher. So be a little weary of this. Ethereum's is looking pretty overheated at the moment, while Bitcoin's is not. So I wanted to point that out as well. And I really like this metric. We even have a Sandsheets model that I can show in an upcoming video on how to spot, big spikes on 40 or 50 assets at a time, all on the same chart, which is really, really handy. One other thing I wanted to show before we get into some altcoin requests would be the funding rates that are happening right now. And we can see that there's actually a little bit of shorting that is beginning to occur. Bitcoin's, as of a couple hours ago, was starting to get into negative range here at negative 0.0005. And altcoins are actually at their lowest point since a couple days ago. This was before this consumer price index data came out. And that's actually a good thing. When we're seeing the funding rates in negative territory, it generally indicates that people are non-believers, and there's a few more shorts opening up that could very well be liquidated and act as rocket fuel for prices to go up again. When things get overheated, you can see when funding rates are in red positive range, and that is usually when local tops occur. And this was a pretty good example right here, right before the big local top. Boom, there's a big decline right after. Won't always play out this perfectly, but I'd say the last 48 hours here is a pretty good illustration of how this funding rate can be valuable. Look at the 2 times that Bitcoin's funding rates went into extreme, I wouldn't say extreme, but pretty decent negative territory. Prices went up here and they went up here until they got long again, and then they declined. I hope that makes sense. Yeah, let's jump into some altcoin requests now for about 20 minutes, and then we will call this stream. Take a look at the comments myself. So Max mentioned LDO and STF. Okay, no worries. Let's take a look at LDO. Lido DAO token. So this is an ERC20. We've got plenty of data on it. The circulation has been rising since early May. That's good to see. If I full screen that here, we can see there have been quite a few major spikes here over the last couple of months. Going back to mid-May when the big price fall was happening, a lot of circulation spikes happen around here just due to the sheer volatility of the asset's price. Mid-June, we had a big spike here, another big spike in late June, early July, and then this final one here in about 3 weeks ago that didn't do much with the price, but it was pretty notable. And these spikes all together have put the smooth moving average of circulation up quite a bit going back to last year. Let's go back a little more. So that if we go back to, let's say, 2020, the last 2 years, this one has kind of dwarfed it. So I'll take off the one that happened at the price's exodus, or at the assets exodus, I should say. Yeah, so there's been a steady rise in circulation ever since about a year ago. The circulation a year ago was sitting at around 1.08 million, and it's now at 6.66. So around a 6x rise in circulation. That's a pretty good sign, showing there's a big expansion on utility for this asset. It's the 64th ranked asset, which is a lot higher than it used to be. And I would say the reason for that would be because ever since June 30th, when it hit its bottom, well, oh yeah, clearly, for sure, because it's up about 500% in the past month and a half. So it's skyrocketed into the top 100 because of that surge. It's still nowhere near its 2022 high, which was $4.88. It's sitting at $2.65 right now. Its all-time high was a little above $7. So there's still a ways to go. And this does appear to be a very, very volatile asset, and can go up much faster than the rest of the markets and also go down much faster. Between early April and its bottom, it went down. Yeah, it dropped 90% in that 2.5 month stretch here. So it's tough to see what's going to happen next, but you can invest a little bit of capital and see major results in either direction when it comes to Lido DAO token. Daily active addresses is looking pretty similar. It's on a big rise right now as well, and a lot of people have caught on to the volatility. It's pretty much on the 30-day smooth moving average. It's at its highest ever right now, sitting at about 508, 501 active addresses per day. It got very close here at 492 back on June 1st. But yeah, this is a very good sign. It's showing that the amount of unique addresses interacting on the LDO network are at its highest point ever. And whether that's due to FOMO or because it's just organically beginning to grow as an asset, it's good to see when daily active addresses are gradually rising like this. MVRV, let's switch to daily MVRV because it doesn't have intraday here. We'll look at both the 30-day and the 365. Get rid of this big spike there. We'll zoom in a little more. Okay, much better. So 30-day first, I'll mark the 30-day danger zone, which is usually right around there. So we're well above it right now on the 30-day. This shows that it's in overheated territory right now at plus 34% compared to plus 15% being a danger zone. And you can see in most cases when we've seen these spikes well above the danger zone, there have been a pretty big declines shortly after. So that was a good example. That was a good example as well. This was interesting. I mean, it's early on in the asset's existence at this point, but anything past the initial, first 12 months or so, the 30-day MVRV has started to become a pretty reliable top indicator. And it also looks like it's been a good bottom indicator. So I can mark negative 15% here. And when we get below it, generally a good bottom indicator. Below it here, it did still decline a little, but when it finally hit its resting point, that marked the bottom and prices began to rise. This was a good bottom indicator, pretty decent bottom indicator, very good bottom indicator. So yeah, I think that right now, with it being about double where the danger zone usually is, I'd be very weary of at least a short-term correction for LDO. Doesn't necessarily have to be the case, but it does look like, based on history, when we've seen these kinds of divergences and the 30-day MVRV being well above the danger zone, that usually indicates a pullback of some type until the 30-day MVRV gets below that danger zone once again. Now, looking at the 365-day MVRV, it's surprisingly pretty neutral. It's at about plus 17%. These massive, plus 1,000%. This is because the asset didn't even exist a year up until this point. So I take everything prior to things neutralizing here in December as kind of a grain of salt. A little too early to make some historical assessments with such a long-term indicator. But as of now, it's slightly above 0%. So there's a little more risk than usual on the long-term end, but it isn't a significant, plus 50%, which would be around a danger zone for 365-day MVRV. So a little bit of concern there because LDO has just gone up so much in the last month and a half compared to other assets. Age consumed, we've seen our share of major spikes, but the one that we're seeing today isn't nearly as significant as the other ones. So I wouldn't put too much credence into that being a big price shift indicator as the other ones were. Supply and exchanges has gone up quite a bit. It's up a little above 5% as people are potentially looking to sell some of their LDO, I would presume. 5% isn't a major amount on exchanges though, so I wouldn't be too fearful of this. We probably want to see things start to settle down. And if you see supply and exchanges continue to creep towards 7, 8, 10%, be worried, because that's a sign that some big sell-offs could be coming up. Let's see if whales have any leading alpha here. It might be tricky, but let's find out. So LDO is currently priced at 265. So we'll look at the 100,000 to 1 million, 1 million to 10 million. This would be mostly exchanges and founders addresses, so we'll keep that off. So we'll look at these three, and it looks pretty good. I mean, it's still a pretty early and young asset, so the founders addresses are feeding these shark and whale addresses still right now. But as long as you don't see a downswing like this, I'd say the red one in particular is probably the most important one to take a look at. Let's just look at that one by itself. So this downswing here correlated with the price downswing, and this upswing correlated with obviously the big gain. And we did see some good alpha. So they took a lot of profit here in late March. And just like with Bitcoin and Ethereum, 5 to 7, maybe 10 days go by where prices can continue to decline, but eventually that whale dump can be felt, and you see a much larger drop than the gain that happened after they started taking profit. Same here, they took a lot of profit right at this tip here at $3.60, and then they started dumping pretty significantly, and price followed them all the way down, right until they started accumulating right around this bottom on July, or I should say June 11th to 13th. And ever since that accumulation, these whales accumulated 20% more in their bags, and prices went up about 226% ever since. So there's some good alpha. I'd take a look at this 100,000 to 1 million coin tier as some good whale alpha for you if you're following this asset closely. Exchange flow balance, not too much. Network realized profit loss, not too much. Development activity does look pretty good for LDO. It's getting about 24, 25 GitHub submissions per day right now. And overall, since last year, it's seen a nice rise here. We can draw a little line and kind of look at how the average has definitely picked up over time. So there are some coders that are actively working on innovating LDO and believe that it has a future in the crypto space. It's not one of those assets where it's getting, 0, 1, or 2 GitHub submissions a day, which would be a much bigger yellow flag. Old emojis left over from a previous template. Social dominance. So looking at whether there might be some alpha, it's hard to say. I could zoom in a little bit here. Yeah, it's not really an asset that's talked about enough yet to really see that when the crowd, jumps on, there's a big price shift, maybe a little bit here in August, about a week ago, but nothing significant that I can really point to. I think the asset might have to be around for another 6 months or so before we really start to see some big spikes in social dominance and how it impacts the price and causes directional shifts. Weighted sentiment, more or less neutral right now. Nothing too significant to say there. Ratio of on-chain volume and profit to loss. We'd expect for it to be mostly profit with the price going up so much over the past 2 months or so. This spike here is so far this week, it's showing the biggest ratio we've seen in quite some time. Let's back it out to a year. Yeah, so I mean, these are the big ones. You don't want to see anything close to 2.0 for the ratio. Those kind of indicate there is a top coming up. This line that I'm drawing here signifies, let me get to 1.0, perfect. So anything below this means there's more loss transactions than profit. Anything above means there's more profit transactions than losses. And we started seeing a turning point in July here, but it hasn't stopped the price from really surging. I would just say that when you start to see something near 2.0, like we saw here or here, these are what signify that tops may be forming. So that's LDO. Balresh, if you want to give me one more, I'll look up that asset here, and then we'll call it a day.
I think the next suggestion we got was Ape.
All right, let's take a look at Ape. I wouldn't be surprised if this is the same person who's requesting Ape week in and week out, but because you're speaking up, we will give Ape some love here and take a look. All right, let's zoom into the last 6 months. We'll do the last 3 months. Okay, so we've seen a few spikes on Ape that have correlated mostly with local tops. This one, that one not really a top, that was more of a bottom. This one was a top. It looks like overall the trend for circulation on Ape is pretty neutral, not much movement either direction. Price has gone up pretty significantly over the past month, plus 58%, not too shabby at all. A little better than the altcoin pack. Daily active addresses moving up slightly since July, but not really much to say. Daily active addresses about 1,700 per day, which matches where it was back in early June. So a slight uptick, and that's nice to see, but nothing extreme like we saw here. MVRV, let's take a look. So since 365 day is already up, we'll look at that one first. It is way above 0% right now. So long-term wise, we've got a bit of a concern here for Ape. It looks like it was in a similar territory this May, about 3 months ago, and there was a big drop off, which is of course something that happened for all of crypto assets in April and May, especially, and going into June too. But you can see that when the 365-day MVRV went to -20, -30%, this was a good marking of a local bottom, and prices since this final local bottom on June 18th, it's doubled just about exactly, plus 100%. So right now, with 365-day MVRV being close to plus 50%, definitely a red flag, something to be weary of when it comes to Ape. But let's take a look more on the short/midterm MVRV to see if it looks a little better. It does look a little better. It's just slightly above 0%, so there's a slight greater risk than usual when it comes to the short midterm time frame. But yeah, this is pretty much neutral because APE does look like it's kind of petered out here as of about a week ago, and it's actually down over the past week. Looks like it's dropped a modest 9%, while a lot of other altcoins have risen. So it makes sense why the 30-day MVRV is close to neutral. But keep in mind the long-term MVRV is still very, very high right now. And there could be a little more correction coming to neutralize that 365-day MVRV and get it back closer to 0%. Token age consumed, we did see a huge spike. This was the biggest age consumed spike we've seen since late June. So this past month and a half, there wasn't anything near it. But the older tokens moving at such an extreme right at this local top, that's a bit of a concern because these are often price direction shifters that can very correctly mark when local bottoms or local tops begin to hit. So yeah, that's another yellow flag because this is a 1.5 month high in token age consumed right now. Supply and exchanges is also climbing, very similar to LDO. It's gone above 5% just recently. And APE has been around a pretty similar amount of time as well. So I would be a little concerned over the fact that a lot of APE is moving back toward exchanges. That usually is an indication that people are looking to sell or take profit, and that can cause prices to move down. Let's see if we can find a little bit of whale alpha for APE. So APE is sitting at about a little under $7 right now. So we'll take a look at the 100,000. 10,000 may not be as relevant in 1 million. So, okay, so the 1 million to 10 million and 10 million to infinite, they hold the majority. So I'll take those off and we'll take a look at these two together. The 100K to 1 million whales are moving down a bit, and they have been since mid-June, even though prices have been rising. And also the 10,000 to 100,000. So that's a concern as well. They're both moving down and don't hold a significant amount of the overall supply of APE, but at about 6.5% together, I'd be a little concerned that these key stakeholding addresses are moving in the wrong direction. I'd call this mildly bearish. If we go a little lower, like 1,000 to 10,000, even that's moving down. A little bit of an uptick here for the 100 to 1K, but they own a very small portion of ApeCoin. Yeah, I'd call this a concern for sure. We're seeing a whole lot of yellow and red flags for ApeCoin, and this is one of the bigger ones because if we just take like the 1K, we're going to merge these all together. 1K all the way up to infinite amounts of coins. They hold almost all of the supply. You know what? I'll take off the top one here. So we'll just merge 1K to 10 million. That should be a little better. We'll even take off 10 million, actually. That would make the most sense. 1K just to 1 million. All right, so this tier combined holds about 8% of the supply, and they've been moving down since early June. And this is people that hold anywhere between $7,000 up to about 700. Let me make sure I got this math right. Yeah, $7,000 up to $7 million or so in ApeCoin. So these are definitely sharks and whales combined, and they're moving down over time. Not a great sign. Not a great sign. I would say that it's a very centralized asset because the 1 million to 10 million coin holders holding 7 million to 70 million, They hold about 88%, and they're pretty flat, at least this month. They were moving up a little bit going into this rise. But yeah, this is a lot of control from the very, very top. And we might need to see a little more distribution before we can make a really good assessment. But long-term wise, just seeing the shark and whale addresses moving down is a bit of a concern in my opinion. Exchange flow balance, pretty neutral. Network realized profit loss, pretty neutral. We don't have development activity data for ApeCoin, unfortunately. I'd be very interested to see what it is though. So it might be on GitLab or somewhere else, but perhaps we could collect that from our devs. Social dominance, not really showing anything significant. Weighted sentiment, interesting to see that it is very negative right now. Let's go back to the last year. So far this week, this is the most negative since Exodus, since the price began being publicly traded. So I'm interested to see what this means. It could mean, you know, just a reaction to the price decline over the past week while most other altcoins were going up. That could be a reason why people are pretty down on ApeCoin right now. This is not a bad sign though, out of all of the metrics we looked at, considering how much crowd negativity there is, just like we saw this week before a big bounce caused them to go positive again. We could see a repeat of that. We saw a price bottom here when it was negative back in mid-June. So yeah, this is of course just a partial week thus far, but if the full week plays out and this is the most negative crowd sentiment we've seen since prices started to be publicly traded, that would be a nice sign because there's so much FUD happening toward ApeCoin right now. And ratio of profit loss is pretty neutral at the moment as well. So yeah, I think we covered pretty significantly what's going on with ApeCoin and LDO. If you have other asset requests, please feel free to bring them to Discord and we'll try to screenshot a few charts for you. But for now, you know, I want to thank everyone who showed up for the call and also for the Twitter Spaces a few days ago. We're going to be doing a lot more of those Twitter Spaces, perhaps on a bi-weekly basis, and bring in more special guests. If you ever have requests on who those special guests can be, you can either put us in contact with them or that we'll drop a ping to them ourselves and perhaps get something organized. But we want to work with many of your trusted names that you rely upon besides ourselves in the crypto space and put together some great calls and discussions about crypto moving forward, where it isn't just me talking or me and Maxim when he joins talking together. We're trying to talk with a lot of different people in the space, and it's always fun. We spoke with Crypto Airy, who's an XRP specialist, a couple days ago, and we had a great 2-hour discussion about the state of the crypto markets. So tune in. We'll probably announce when our next date is soon. And in the meantime, on behalf of Balresh here, who did a great job running the stream and modding the chat, thank you to everyone who joined, and I hope you have a safe, warm, and healthy weekend. We'll talk to you very shortly. Sure. Yeah, I'll do that on the YouTube chat here and the Discord chat in just a moment, okay? All right. Take care, guys. Talk to you soon.